A big correction in the Nifty and the Bank Nifty index, a very interesting day. What is the scenario going to be like now? Let's find out with our seasoned senior market analyst, Jay Vora. Hi guys, this is Shilpa Raidas and I welcome you to yet another midweek with Indiacharts, and very welcome, Jay.
Hi, how are you doing?
I'm doing very good. How are you, Jay?
All good, all good.
Wonderful. We are very excited to hear your analysis today. So let's begin quickly. Jay, we have seen an up move in the dollar index and the US 10-year yields recently. What has led to this up move and how the international markets are looking at this point?
So I think two factors that I can think of. One is that market is coming to the reality check that probably Fed may not cut the rate in March and they might cut only in June. So that is one factor. The other factor is also that there is some geopolitical tension that is going on. So around the Red Sea area, that is where, there is some unrest and, the ships of UK and US were attacked, I guess. And that has kind of spooked some fears, I think, because the issue is that if the Red Sea route is not being taken, then they'll have to go all the way to, I think, from Africa, and that will take 20% more time for them to reach the destination, and that would also mean that it would translate into a higher cost. So this factor would again, possibly lead to a resurge of inflation. And that is also one of the fear which the market participants have. So I can broadly think of these two factors why the bond yields have risen recently. And that has caused some bit of headwind for the market as well. So let me share my screen. One important development that has happened in the dollar index is that, firstly, we had spoken about this, that it is at the 40-month average, which was basically this blue line. Okay, this blue line, the moving average, it has bounced back from the 40-month average. Okay, now when we go down to the hourly chart, what was happening was that this was a big decline in the dollar index. What we are seeing right now could possibly be a counter trend rally of this entire decline, or the other way to think about the dollar index is that this can be a big A, B, C, D, E kind of structure that is possibly unfolding in the form of triangular pattern. If that happens, then there can be a scope of up move towards 108 as well, and that market might not necessarily receive it in a good manner. In fact, it will become a headwind for the equity. So as of now, in the near term, what we are looking at the retracement level, that is either 50% retracement level or the 61.8% retracement level, which is either 104, that is the 50%, and 104.77 is the 61.8% retracement. So there is a possibility that in the near term, we see the up move till this point. If the 61.8% retracement marks get taken on the upside, then those fears will resurface where the dollar index can even move higher towards 107 or more than that. And if that has to happen, then there can be some trouble for the equity markets. Now, if you actually see the world market, there has been a significant selling pressure that we have seen in the recent times. So, let me just quickly share you the tabs which I have made. So if you look at the developed markets, so I think it is barring Nikkei. In fact, Nikkei also today has seen a big reversal, sharp reversal from the day's high. But Nikkei and Canadian and the Canadian index might look okay. But one thing which people need to realize is that Canadian index has not even come back towards its previous high, and this entire pattern looks like a corrective pullback. If at all the next leg of decline should occur in the form of wave C, then it can be terrible over there. Okay, so honestly, see, different indices have different setups. Okay, but broadly, what I am trying to point out over here is that in the recent past, in the recent days, there has been significant correction which the markets have seen. Okay, so this is the CAC index, this is the DAX index, this is FTSE that we have over here. Okay, FTSE has been relatively weak. It is only the US index which has been fairly resilient. I mean, the S&P 500 you can see over here, which has been fairly resilient. So now, I mean, given that US indices have I mean, it is a widely tracked market. So let us look at the internals of the US market. So when we look at the US indices, it is actually not a very pretty picture. The reason why I say that is because, see, in the first three, you can see that there is barely any correction, right? I mean, this might look like a sideways consolidation. This might look like a sideways consolidation. Over here as well, there has been a pullback, then an up move. But when you see the Dow Jones transportation, it has fallen, say, somewhere around 1,000 points from the highest level. If you see the Russell index, it has also nearly corrected 6-7% from the highest point. Metals and minings have corrected. The US banks have also to some extent corrected. And in fact, when you see the utility index, that is the Dow Jones utility index, it has been declining over here. So, within US indices also, if you see, there is a massive divergence that we are actually seeing within the indices. So it is, maybe I feel that because of Nasdaq index, you can't really see the weakness in Dow Jones or S&P. But yes, beneath the surface, there is a lot happening over there as well. And I suspect the way things are, and given that the dollar index can also rally in the near term, there is a possibility that these all indices can see some correction. But the process that we follow, that needs to be followed, and that is, if so for the S&P 500 index, firstly it needs to break the 40-day exponential average. I mean, 20-day will be an initial support level. If that breaks, then 40-day exponential is an important support level. And it's only if the 40-day exponential breaks, that's where you need to be a little concerned of a deeper correction in overall context. Okay. This might still look like W, X, Y, X, and Z, or if someone wants to count it as impulse as well. I mean, this may become 1, 2, 1, 2, and I don't know if there can be again a 1, 2. So I would more tend to think that this is probably W, X, Y, X, Z, given that a lot of US index has not really recovered and come back towards the previous high. Okay, it is only handful of index which has done that. And if this entire move is corrective and pullback, then there can be a massive decline as well over there. And there is already fears of slowdown, recession, and so on. So let's not get there. I mean, there has been ample of discussion. We have heard in the past, but let us go level by level, because one thing that people need to understand is that when you look at the higher time frame, okay, which is the weekly chart, and I think over here, if it starts rolling over and we see a bearish crossover, then the chances are, so basically I would think that only if the weekly averages break on the downside, that's where a bigger potential decline will open up. But until then, at least in the near term, what we would work with is that this entire decline, I mean, this entire rise would be complete, and at least a retracement of this rise can unfold. And again, if 61.8% retracement mark that breaks in the S&P 500 index, which is from this high to this high, if we take, and 61.8% retracement mark at some point, if it breaks, then that's the point to worry. Okay. Until then, we would think that there could be a normal correction, and we will see how things unfold, because as of now, we are keeping the wave counts open, keeping in mind that there are significant risk right now, and we need to be open to that risk. Okay, so at this point of time, we are not saying that the market would see, say, 30-40% kind of decline, but honestly, the setup is there. We need to wait for the confirmations. Okay, so that's where we are being on the sidelines. Now, one more thing, I don't know if people are taking notice of or no, but when we look at the emerging markets, especially the Hang Seng index, I mean, that is that is like gone crazy. I mean, it has fallen, I think, almost 50% or so from the COVID high. So this is the Hang Seng index. And if you see, it had made, I think, nearly a high of 33,000 or so in 2000 and in 2018 it had made a high. So in fact, even after the COVID rally, it did not breach above the previous high, and this has been literally in dumps. If you see this, if you see the Shanghai index, it has been collapsing. If you see the Thailand index, that has been collapsing. It is only Jakarta index which is near the highs. Brazil index which is near the highs. Australian index also, if you see, I mean, it has not broken past 2022 high. Okay. But yes, I mean, even if you see Kospi, okay, wait, let me zoom in the chart of Kospi so that you understand the kind of decline the Asian markets have seen. Okay. In that entire context, our Indian market has outperformed way too much. Okay. And I was reading somewhere, I'm not too sure, but the premium of Indian indices to MSCI emerging market, that has crossed one standard deviation, or I think two standard deviation. And that, sort of sums up the kind of outperformance that we have seen. Okay. Now, like we have mentioned earlier as well, that, such trends cannot diverge for a very long time. Either two things has to happen. I mean, emerging markets should eventually catch up, or Nifty or the Indian indices which have gone way too much, they should cool off. So something of this sort is going to happen in the next few weeks or few months, and that is something that we honestly need to watch out for in the days and the weeks to come.
Okay, wonderful. So we need to wait and watch out what is going to unfold in the days to come. That brings us a lot of clarity. Thank you for that, Jay. Jay, the next question is that today we have seen a really big correction in the Nifty and the Bank Nifty index, right? So does this change the scenario in the short term, or is the market still looking bullish to you?
So see, firstly, what has happened is that Nifty has seen a massive rally from 18,800 levels to almost around 22,000 levels. Okay. And that too, we haven't seen any major sort of correction in this phase, right? So at some point, Nifty has to take a breather. And if we look at the channels, this was something that we had highlighted, that if we draw this parallel channel that we have done, Nifty has hit the upper end over there. For a day, it did manage to close above the upper end of the channel, but eventually it has witnessed a correction. And people who follow the chart patterns, you can say that it is an island reversal or the abundant baby top. Now, these are actually, very rare patterns, and it sort of means that these are powerful bearish reversal patterns, especially if it occurs at top. Okay. So if it occurs at bottom, it becomes a bullish pattern. So since it has occurred at the top, and since then the prices have reversed, I think now until this high is not taken out, which is, I think, 22,124, until this high is not broken on the upside, there is a risk that we see a correction of this entire up move. So in this, obviously, we would go level by level. So today, the Nifty index has broken this resistance, I mean, this support line, and it has closed below the 20-day average. What it means is that in the near term, you should be open for a decline up to the 40-day exponential average. And also, one important thing that has happened is that already we had seen a massive negative divergence on the RSI and the RMI. And today the RMI has given a bearish crossover. So just couple of days back, it gave a bullish crossover, but again today it has given a bearish crossover. So I am expecting the RMI to complete its pullback cycle and come back to zero. And once again, if it gives a bullish crossover, we will see the situation then how it plays out. But at least in the near term, I would expect that this cycle would get complete, and probably Nifty may end up testing the 40-day exponential average.
Okay.
Going forward, if the 40-day exponential average breaks, then you need to be open to the retracement of the entire up move, with worst case being the 61.8% mark, which is around the 20,000 mark. Okay, so if the 40-day breaks, then we first have to be prepared for 38.2 and 50% retracement. And if those two retracement breaks, then 61.8% is the one that we need to watch out for. Okay. Now there is one specific thing which I want to tell our viewers, and honestly I am a little bit concerned about, is the Nifty. It has outperformed the Nifty index, at least even in last few days, or you can say overall, in terms of an up move, say from this low to this high as well, it has outperformed significantly. But in the overall context, the RSIs are at a very elevated level, and moreover, we are having divergence as well on the daily chart. And I think in case of the monthly chart, we have a bigger divergence in the mid cap index. So say, I mean, this was the high over here, which was the highest point, and now around this high, the RSI is slightly lower, and this is a divergence that we are seeing on the monthly chart, right? So obviously, till the time prices don't reverse, I mean, it might be too early to call a divergence. But what we also see is that it is at the upper band, and the weekly read and the monthly and the weekly readings, I mean, you go in whichever time frame you want, either there is a big negative divergence or the RSI values are elevated. So this is the case for mid cap index as well as for the small cap index. Okay, in fact, in case of small cap, what I see over here is that it has even broken the previous high, and now the monthly RSI is around 80. On the weekly, you see the RSI post today's decline, it has come down a bit to 82, but otherwise it was around the 88 level, which I had highlighted to our Indiacharts subscriber as well. Now this, only in 2014 we had seen such a high reading of RSI on the weekly chart. Okay, the next highest reading that we have seen is around this point, okay, which is right now. And see, what had happened over here was that when there was such a high reading, I mean, basically at this top, we eventually went for a prolonged corrective phase. So there can be two scenarios in which the high RSI readings that we see can be corrected. It is either if the stock goes up, then it can go through a prolonged corrective phase. Okay, so such corrective phase will help to bring the RSI down, or else you will see a sharp reaction, and that will quickly bring the RSI down. So either of the two cases are possible. In either of the two case, the thing is that the upside could be capped. Okay, and if that is the scenario, then you need to be a little careful, because all the retail people, they are mostly into small and the mid cap index. Okay, so that's where you need to be a little careful. In fact, when we look at the bank Nifty, this pattern also looks like a wedge. Okay, now the entire debate that even we keep having is that, is this a leading diagonal or an ending diagonal? Both have totally opposite implication, because if this is a leading diagonal, then at the best what can happen is that there is a retracement of this entire move and then it rises higher. But if this is an ending diagonal, what it would mean is that the entire rise from COVID high to this high is complete, and we could see a deeper correction. Okay, so again, we wouldn't want to get over there and take such big bets at this point of time, or big calls at this point of time. But at least one thing that is very clear is that bank Nifty had a very good support around this 47,000 mark. Okay, now with today's disappointing result from HDFC Bank, it has led to a big gap down opening in bank Nifty, and this important support level has been broken with a gap. Okay, now this has negative implications on the price action, So at least in the near term, like I said for the Nifty index also, like if 20-day breaks, then you think of 40-day. If 40-day breaks, you think of the retracement. So far, Bank Nifty is leading on the way down, and it has retraced 38.2%. If this breaks, then 50% would be the next level to watch out for. And if 50% breaks, then 61.8% retracement, which is at 44,600, that will be the next level to watch out for. It's only when 61.8% retracement breaks on the downside, okay, that's where you need to be a little more concerned and think if things are changing fundamentally or structurally, and that's where we will then take a call whether basically is this an ending pattern or a leading pattern. So that's how we are approaching at this point of time. So honestly, for the Nifty index, see, this was the resistance that we spoke of, and from there it has corrected. Now if the breakout is genuine, then Nifty index might find support around this level, because this was the breakout point, right? So given that it is in a bullish trend, so it will find some support over here, then maybe there will be a pullback, and then there will be test of this low. So if this low breaks, then again we are headed lower, and that's where multiple support levels will kick in at lower level. But in the near term, at least, I think that this cycle should be complete. Okay. So for Bank Nifty specifically, this cycle got completed. Okay. This cycle you can see got completed, but you see any other major index, mid cap, the cycle is not complete and it is in sell. If you see small cap, you will have a similar pattern. Cycle is not complete and we are having negative divergence and it is rolling over. Okay. So these are all places where there can be, case of a multi-week correction as well, or you can see a deeper price-wise correction. So one needs to be prepared for that. Even the high flying index like, PSUs, which so far have not, seen any major correction, you got to be a little careful over here as well, because even in the BSE PSU index, if I see, the RSI readings on the weekly chart is at 88, which is, very elevated levels. Similar case, reality index. So over here, the RSI was say somewhere around 87, but only recently, in fact, I think in a day or two, it has corrected from the top. Okay. And over here as well, we are seeing a bearish crossover. So in all these indices, mostly wherever the cycles are incomplete, which means it has not come back towards the zero line, those all things will happen, I suspect. And once those things happen and there is a bullish crossover, that will be the point where we'll review if things are bottoming out or no. But until then, we will be waiting patiently and we'll be waiting to see if the correction ends or not. And how things unfold and how ugly things get, we'll wait for that and we'll see the structure later on.
Okay. And well, next I have the most asked question from our viewers for you. Jay, please tell us, what are the sentiment data on strike telling us right now?
So yes, so when we come to strike, the FI's positioning is frankly the highlight, because I can see a very similar pattern which is now developing. Over here also the Nifty was going up, without any major correction, and it looked like that it can continue its run forever. But eventually, when the FI's positioning, came to around that 1 lakh position mark, eventually there was a cool off. Okay, so yes, there was another up move and then there was a cool off, but such high readings usually lead to some sort of correction, which can be multi-week as well. Okay. So like I said, there are two ways for the price to correct. Either it can go sideways, drift lower slowly, or they see a sharp correction. Okay. So which one will be, that is very difficult to predict right at the start. but you know that we are getting over there. Okay, so we are probably going to see either time wise or a price wise correction, because this time around as well, the FII's positioning has come back towards the second line, which was around the 90,000 mark. And right now, I think it is around 80,000 mark. Okay. So it is still at an elevated level. And if there is a profit booking from FIIs, that can possibly drag the index lower, because they usually tend to trade in the direction of the trend. Like if the Nifty is rising higher, mostly they will be on the long side and they will be increasing their long positions. If the Nifty is declining, they will do that. Okay. So that's how typically their behavior is. And I suspect that given that Nifty is entering into that corrective phase, I think there will be eventually long unwinding by the FIIs, because many of the stop losses will get triggered, right? And if that happens, that can further put pressure on the Nifty index. Also, one thing which I have observed, that even clients, they have made a significant mark, and their positionings are also widely tracked. So
Right.
the clients short positioning, okay, in the index future was almost at the highest level since I think 2018. Okay. So in clients, basically all the HNIs, ultra HNIs, and all those people fall into that category. And usually they are max short at the highest point, like you can see over here. Okay. And when it's a bottom, they are maximum long at the bottom. Okay. Even over here. So as you can see over here, but when the tops occurred, they were maximum short as well, right? So once again, they are around the max short level zone. Okay. And the FIs are at max, long position zone. So, I mean, if we look at the historical data, so that's where I think I get furthermore confidence that probably, we are headed into that corrective phase, and the excesses that we are seeing in the FI's positioning and the client positioning, those will correct and those will mean revert. And, we might possibly end up seeing some sort of correction. Now, in this case, see, what will happen is that swing, which is also which also helps to gauge the very short term sentiment. So say if it goes to around 20 or 10, the market might get oversold and we may get a pullback. But again, what will happen is that the swing will bounce back and then it again decline. So those kind of things will happen, in which case, if you want to time very, very short term tops and bottoms, daily swing will sort of help you to understand that. But also one more important thing, which I saw today was, in fact, not today, but which I have been noticing, but so far, it was not taking that limelight, which was the 40-day exponential average. Okay. So now again, we are at this point, and at least in the recent day, in the recent time, you could see that this ratio was declining. Okay. But the Nifty index was rising higher, which was telling you that the participation from the stock was getting a little narrower. It was not as robust as it was at this high. Okay. So typically what happens is that when the averages breaks, so like right now we saw the 20-day average breaking, I would expect that even these ratios would correct. And if these ratios has to correct, then probably there could be, there could be a chance that the market could be under pressure in the near term. Also, when we look at the diffusion indicator, we had a similar sort of reading over there as well. You could see that the index was making newer high, but the percentage of stock above the 20-day average was kind of declining. And today it has seen a sharp knock. Okay. So I expect this also to be under pressure, and maybe, once this correction ends, you will see this ratio, probably coming back to 20 or 10, and maybe that would be the time to see if there is a short or a medium term bottom that is made or no. But until that doesn't happen, I think we have to be mindful and we have to wait. So today the market has given, some sort of reversal signs. But, if we further get a follow-up selling, then we need to be little careful. So yeah, so that's it from my end.
Okay, Jay, thank you so much for the clarity, for the explanation. Of course, I would like to leave the link of Strike down below in the description as usual, guys. We are offering a 7-day free trial for Strike. So go into the link and sign up right now. I would also like to tell our viewers that this coming Saturday, our speaker, Jay Vora, is also holding yet another free webinar. The topic will be how to find support and resistance in options using Strike OI Insights. It's going to be very interesting. You will find out how, a bird's eye view of options activity and understanding the trend of the stocks. Also, you'll find out how to, find stocks around support and resistance. So it's going to bring you a lot of knowledge along with, how to use Strike, a better outlook. So do attend the webinar. The link is going to be down there in the description. And thank you very much for the wonderful session, Jay. It was great. Take care. Thank you.